You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together, shall we? Because it is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the THE, optionsinsider.com. Accept no substitutes, as well as, of course, from the network upon which all you folks are having a good time. I hope you're having a good time this week. I'm having a good time bringing all this fun to you, all of us here at the Options Insider, having a good time bringing all this fun content to you this week. So if you missed anything, it's all hanging out on the feed for you. Of course, if you like Vol, you missed our great pro Q&A with a guy who has a little bit to do with Vol, Mr. Scott Nations, created one or two Vol products in his day, fresh off his Jeopardy run. That was fun in and of itself, just tuning in to hear his Jeopardy experiences. But yes, he was tackling your questions on the pro Q&A. If you want to check that out, as well as the 150 or so others that are up there waiting for you, as well as, 100 odd options oddities, as well as early access to all the stuff that we did down there at OIC, which is hitting the network in the coming weeks, as well as a whole bunch else, including great giveaways like pro trading crates. Congratulations to our longtime member, Age Delaquare. Just won his second pro trading crate. So you keep your name in the hat long enough, you will keep winning, listeners. Only one place to go to figure that all out for yourselves, theoptionsinsider.com/pro, P-R-O, or for you cool kids out there, I haven't dropped this in a while, for you cool kids, /secret club. That's just for you. Don't tell anybody else about that URL. Just for you listening, you know who I'm talking to. And speaking of talking to people, let's see who I'm talking to on the old program this week. First, let's go out to the UVIX hot seat, where we are joined once again by our old pal, the once future and now present Dr. VSTOXX, the newly minted, because the man's crunching a lot of VSTOXX data these days, a.k.a. Mr. Russell Rhoads, who's also holding court over there at the Kelley School of Business, where he is corrupting the young minds of the future. Mr. Rhoads, I do have a challenge for you. I was doing our TWIFO show yesterday with a guest who's a professor over there at the School of Business at University of Illinois, and he just won the Undergraduate Teacher of the Year award. So we have high expectations for the academic members on our network now. You got to really raise that bar, sir.
Yeah, I saw. I saw he won that award. I have never won a teaching award, which makes me think I probably just have terrible imposter syndrome, and I think I'm much better at what I do than I am. So there, but no, he's a great guy. He lives out here in the western suburbs with me. We've met because, if I had to find somebody in the world that was as close to me professionally, it's him. He's a professor at Illinois. I'm down at Indiana. We both still live in the Chicago area. We still have a toe in the industry. But yeah, nobody ever. I never win teaching awards. I think I might be too honest with the students and give them too much material to criticize me about in my feedback.
Coming from a supposed bastion of higher education, where all of my professors were, shall we say, mediocre on the teaching end, great researchers and no great theoreticians, not great educators. Yeah. So that's always impressive to me, is see a professor who can actually teach a respectful thing. So you have time. You're new. You're young.
I'm working on it. Actually, you have to be at IU 3 years to win a teaching award, and this is my third year.
So you don't even qualify yet. So there we go.
I know I don't. I gotta whine anyway. You know me.
All right.
Not whining. I'm not on the program.
Coming soon, a teaching award for the once and future Dr. VSTOXX. I don't know. He's a bit of an educator himself. Maybe he'll win an award someday as well. Maybe the Meatball will finally give you an award. He is the once and only Rock Lobster, a.k.a. Mr. Andrew Giovinazzi from OptionPit.com, who's battling clam pirates as we speak. Mr. Rock Lobster, welcome back to the show. Any awards in your future, sir?
I don't know. My students might give me an award for being quiet. They're like, why don't you just not say anything for a couple of weeks? Maybe not. I don't know.
Your students do pay you money, which I guess at the end of the day is the ultimate award, right?
Right. Yes. They're just happy that they learn how to make money. They're happy that they learn how to trade the vol products. They're just happy.
They're just happy, which is more than we can say for the Rock Lobster. But can we say it for the vol market this week? Let's find out, listeners. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, bringing to a close a tumultuous week in the markets and indeed in volatility. We kicked it off with, I guess, what you can call the return of the meme stock frenzy, meme stock 2.0, or is it maybe 3.0 now? I lose track how many meme stocks we've been in now. But either way, kick things off with a frenzy. Things are rallying hard, your AMCs, your games, all that fun. Seems like we've mostly crested that wave and come on down the other side now, listeners. We also, of course, had a cooler than expected CPI number. Everyone was, of course, waiting for inflation, and that number really seemed to boost the markets this week and kind of give the old gut punch to volatility. As we're coming into the final session of the week, after markets have kissed or closed at new all-time highs almost every day for the latter portion of the week, we are now kind of hanging out pretty much unched to end the week. NASDAQ off slightly, about 0.05%. S&P up slightly, not even 0.05%. The Dow leading the charge, up about 0.2%. And our old friend that was giving up the ghost earlier this week, Russell 2000, now rallying up about 0.1%, pretty close to it out there. All that a long way around to saying our vol friends a little bit lighter this week than they were last week. Last week, we were at about 12 3/4. Now coming in to start the show, we're hanging out right around 12 1/4. In VIX cash, obviously down about 0.5 point on the week. VVIX, though, we have had a little bit of froth. We were at about a 73 last week. That's a hard level to maintain. So we are up about 5 points on that of the week. 78, still a level to pay attention to out there. We are in that interesting time of year. Again, normally when we see VVIX kissing a 75, or dare I say it, breaking through it, we're like, okay, here we go. Get ready for vol to come roaring back to life. But in early May, not much on the horizon really until the election or until the next earnings season. This is a time when we could maybe languish in this period for a while. So intriguing stuff afoot out there, but that's a long way around. Let's jump to it now and see what everyone's seeing, what's lighting up their tapes out there on the vol front this week. Let's start with the rockingest of lobsters, sir. Mr. Rock Lobster, what caught your eye on the vol front this week, sir?
Oh my gosh, I go before Dr. VIX. Is the sun still yellow and the sky still blue? I can't believe it. I before Dr. VIX. Anyway,
you get your own show in like an hour, so I don't know what you're complaining about.
Oh, that's true. Yeah. Okay. All right. you know what? All-time lows for the volatility products, I believe. I think Russell probably laughing all the way to the bank. All-time highs in SVIX, right? So you ultimately, you learned a lot. I learned a long time ago, in like sitting in a pit. You can think one thing, but the market's thinking another. So with whatever we can create as a as negative news or whatever, the reality is stocks keep going up. Vol keeps going down. Realized volatility is starting to get into the single digits, I believe. I am seeing volatility at 2-year lows in many, many, many stocks. It sets up for basically my favorite trading setup of all time, which is just buy the crap out of everything and buy as many VIX puts as you can and just wait. So anytime we're tickling, I think we're going to trade the 11 handle today, at least tickle it for the first time in since December, I think we saw it the last time. So listen, nothing's going to happen unless something happens, of course, this weekend. Anything can happen, any overnight news. However, you got NVIDIA news coming out on the 22nd. I feel that will be a volatility moat of despair. And you could see all the term structure pricing that until NVIDIA earnings come out. And if they're good, who knows? I mean, 5,400, 5,500, whatever, right? AI forever. So market loves that stuff. And everybody got to relearn the power of 600 volatility in a meme stock. It's just that this time, instead of it taking a couple weeks to get to 600, they got it to 600, in one day in GameStop, I think. How long did it take? I think it was insto volatility this week. So that's what I'm seeing. So the steeper the curve gets, the more the market is looking for short-term vol to go lower. And that's what we got. So unless there's a reason to change that right now, I don't see it. And, products like UVXY, even with the market down here, decaying at pretty fierce rates, like 25, 26 cents a day, something like that. So, hey, let the melt begin as far as I'm concerned.
So a volatility moat of despair. I'm trying to figure out how that works. Is the moat filled with despair and you fall into it and you get the despair? Is it you come up to it and then you can't cross, so you have despair? If you get over it, are you then beset? How does the despair work?
You gotta go like Dante's Inferno, where the vol buyers jump into the moat.
Oh, okay.
Right? And then the moat pulls them back in as they try to wait for their VIX calls to make them money. Just pulls them back. You're making nothing on those VIX calls.
So by that analysis, everyone who's owned a VIX call for the last couple of years has been in that mode of despair, just getting sucked back down.
Today, though, they're getting their head put under the water and just violated. So, like, when you're trading at 12.17, you got a month to go, and the 13.5 call is $1.14. I'm just saying, okay, all I can see is vol on that from live vol 64%. And by the way, I know it all could change, but anybody buying juice is just getting a shellacking. So anyway, that's how vol gets lower. Everybody loads up at 12, 13, thinks, okay, we're going to get the bounce. And then not only does the bounce not happen, but the market doesn't move. And, you're a liquidity provider. You can remember the summers where, you'd rather be painting a house than showing up to work every day, because every day is going to cost you another X number of dollars. Although I have to say, in like 99, 2000, 2001, that really wasn't a problem because we had realized vol. But, as of right now, you're at all-time highs and you are in a bit of a vol despair mode. So I have held off, actually, going yard into buying some VIX in June and July yet. But I'm sure next week I will get a little bit more active in there. And mostly because the contango, like, we'll get that in the vol curve, but I think it's setting up for an interesting trade. But it's again, not higher highs are not going to surprise me. I would be more surprised by 5,200 at this point than 5,400. Let's put it that way.
So just to clarify for our listeners, if you own VIX calls right now, you are being sucked into the mode of despair. Your head is being held underwater, and you are being violated at this moment.
That is correct.
Just to clarify the imagery for anyone who was uncertain.
Well, if you're like, should I buy some? I think I just gave you the story. I don't know how you want to. Do you want to try to find the silver lining in that cloud? Knock yourself out, okay?
Is this? I'm just going to degenerate even more on this one. Is this the volatility traders version of the guy driving around in the van without any windows, offering candy to volatility traders to just get in the van? It'll be okay.
Just buy the VIX calls. They taste great. Come on in. The first one's free.
Yeah, come on in. It's totally fine. Yeah, right. But that version is making VIX low. It's like, all right, we'll put VIX down here. We tricked them with candy once, and they were okay. But let's here. We're gonna. It's not candy this time. It's ice cream. It's an even lower VIX. Get in the van.
I'm gonna put the explicit tag on this show if we keep going.
I know it's pretty bad.
Down
it's
this
like
rabbit hole.
It is getting something.
Yeah, it's definitely. So I will try to steer us back in a new and more intellectually challenging direction. I had a little thought, and one of the reasons I love doing this show is something always gets created for me to work on, but I'm going to ask you guys if anybody else has ever done this. I'm wondering if there is some sort of seasonality to VVIX as far as how many weeks until expiration, because we worked our way up a bit with VVIX this week. We were under pressure last week. This is the week that most people would roll their positions from May into June. So I'm just wondering if, when we've got a couple of weeks till the near dated expiration, if VIX isn't doing a whole lot, everybody's already got their own positions on, so VIX will go down to a low level, but it won't attract the call buyers. And now June will give you a pretty good bang for your buck relative to a move out of VIX. And, maybe people are starting, and the really smart volatility traders know you want to be on the nearer dated stuff. Even if you think of volatility events coming by December, you really want to have long May or at this point, I think June exposure. So I'm wondering, I'm going to try to break out the numbers and look at the average VVIX change on a week over week basis based on what week we are in the VIX expiration calendar.
I think
there's some logic there, but and if somebody else ran the numbers, that's great. So I don't have to do it. But it seems to me that there might be something there.
I think there is some logic to that, because I've been digging a little bit deeper into VVIX after last week, looking at some of those numbers I was looking at historically. It got me pondering the historical levels of VVIX. I think there could be something to that. And to my knowledge, I don't know of anyone who has done that from a pure weeks to expiration perspective. So there could be something there. At the end of the day, we've always discovered in the long history of this show, the devil is in the details for all of these vol products. And the smallest, sometimes seemingly most minute detail could cause unforeseen consequences in some of these products. So it wouldn't surprise me if that is indeed the case. So I like that. I like that for a homework assignment for the once and future.
For me.
Yes, for the once and future Dr. VIX / VSTOXX, depending on his mood and the recent. Now I guess you can call him Dr. VVIX as well, because he's got that homework. As we keep on rolling, listeners, let's get out to the vol surface to see what's catching our eye out there this week. As you might imagine, it's mostly lower. Coming into the start of the show, the May future, which again, not much longer for the world here, but moving down almost a full point, about 0.9 of a point when we kicked off the show. June, not that far behind it. June down about 0.8 of a point. So continuing that trend of keeping that front portion of the curve moving almost in lockstep. If we go all the way out now through to October, which is where we've seen that spike for the election for some time, we're shy of an 18 handle. We were well north of 2021 not too long ago, listeners. 1791 out there in October when we kicked off the show. And if we keep going back out to December, it comes right back down. We have to go back to pretty much January of next year, and you get back to about a 1760 out there. So that's where we're looking from, how we're shaping up from a contango perspective out there. Mr. Rock Lobster, we'll start with you, sir, while the once and future Dr. VSTOXX is crunching away at his homework. So what's catching your eye out there in the vol surface this week?
It's normalizing for VIX being this low. You're starting to get like a very steep curve again. I think for the first time this year, like most of the forward vols are in a more historical, closer to a historical average. That's the way I look at it. Okay, how far are they deviating from average numbers? So those are getting a little bit back to normal. Yeah, and I would say something too, the Russell idea. I don't think that's a bad idea at all about the seasonality of VVIX. Because some of my students have mentioned, you get the futures are way over cash, and then sometimes I think the volatility is in the future spread between future and cash, and not so much in the options, because already the futures are so expensive, right? So if you want to buy out of the money calls, you're already paying $1, $2 more to where VIX is trading, because the future price is so high and the options trade off the future, which could, right, de facto lower, could get you lower vols, lower VVIX numbers. So I think that's a totally reasonable observation by Russell. But yeah, you have, again, the steeper the curve goes, the more the market is expecting, or realized vol is lower in the short term. That's generally how it works. If you just go back, look historically, you get a super steep curve, VIX curve. So that's sloping down in the front on the left side and sloping up steeper in the back. Usually you have realized vol in the single digits in SPY or SPX. And that's what all of a sudden it literally, I guess we had that month of April, right? And it's all gone. It's all gone from the option pricing. So whatever everybody was worried about in April, so inflation's, I think, not going away. I think the rate thing goes off and on. But the reality is, I don't think they can lower rates from where we are until the government stops spending money, because they have to sell bonds. And I think the markets kind of figure that out and don't really have a solution for it, I guess, except stop spending. But, if companies can grow, right, and of course the internet has created like almost infinite scale, and AI will create another level of infinite scale. Heck, what the heck? Things are going to go up. So, and I think that's where we find ourselves right now.
So we're climbing out of the mode of despair and into maybe the season of the abyss on the vol surface. Mr. Rhoads, sir, same question for you. What's catching your eye out there on the vol surface this week?
Well, I was a little surprised to see a little bit earlier when I do my 10 a.m. thing. You had the VSTOXX, and I know we haven't gotten to VSTOXX yet, but on the VSTOXX term structure, the VSTOXX front month future was it's come in since that market is closed, but it was over a point premium relative to spot when we've got settlement next Wednesday, which I thought was kind of tight considering how low we are right now. And the VIX, and VIX is even tighter than that. It's at like 75 cents right now. So, I think everybody's still slightly on edge, not nearly as much on edge as they used to be. I actually think that the number of people that are tired of getting in the van for the ice cream or the candy and buying the VIX calls maybe are on the sidelines right now. Maybe they have this impression that we're going to have a dull summer, and then with the election facing us down, they'll come back into the market or whatever. And the curve, the VIX curve kind of reflects that. The VSTOXX curve doesn't. And I checked to see, I didn't see any major European numbers that come out before expiration next Wednesday, nor, of course, any big U.S. numbers that come out before expiration. I think that just might be a function of when we do get the volatility events. It seems like VSTOXX runs up faster than VIX. So maybe some Europeans are long some volatility just in case we get some goofiness this weekend. And it's, you almost don't want to predict hypothetical goofiness because so many of the hypotheticals I used to use have come true.
Yeah, that's true.
So I used to always kid about my running thing when I would defend UVIX was, well, if Putin's going to invade a neighbor over the weekend, buy UVIX on a Friday. Well, that's not even funny anymore.
Yes, so many things have come to pass in the last 4 years that were previously just theoretical, listeners. But you have invoked VSTOXX, so it is time to go international, listeners, with a little bit of the old international volatility review.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX.
All right, listeners, let's get to it. Let's peer across the pond, shall we, and see what's cooking in the international vol waters. Kicking things off, obviously, with our old friend VSTOXX coming into the start of the show. It has given up the ghost quite a bit. One of the things we've been coming to grips with for a while here now on the show is just the relationship, as Russell was just alluding to, the interplay between VIX and VSTOXX. When one of them's going to catch a bid, when they're going to move in lockstep. I'm still working to dial that in. I'm sure a lot of you are out there as well, listeners. Coming in to start the show, we had VSTOXX at a 12.13, listener. That's down almost 1.5 points, 1.4 points. So you could see, once again, a lot of interesting things going on in that relationship in a week when VIX Cash has only given up about 0.5 point. We've seen 3x that in VSTOXX out there. So clearly there are other games afoot out there, which again makes this analysis fascinating. Also, looks like we just bounced off of what was the 52-week low. That was 12.12. So we're at a 12.13. So pretty much at the 52-week low right now, listeners, for VSTOXX. We hit it back in December of last year. We threatened it again, got down to about, 12.18. in March before rallying again, and now we're right back down there again. Also a long way away from the 23 1/3 that we were at back in October of last year. So if you're wondering for some frame of reference, that's where we're hanging out right now in VSTOXX, listeners. Pretty much at the bottom of the 52-week range. And if past his prologue right now, probably threatening to go lower. But Mr. Dr. VSTOXX, Mr. Doctor, say that 5 times fast. Mr. Doctor, I know you've been crunching a lot of numbers out here in between episodes of this fine program. What's catching your eye out there in VSTOXX land this weekend? You kind of just touched on the relationship between VIX and VSTOXX. Anything else catching your eye out there, sir?
No, the front month future, typically you would expect the VSTOXX future to be at well over $1 premium relative to the VSTOXX front month future, which should be at about $1.60 premium to the front month VIX future. And today is the day that I roll these, where now I'm switching to June. And the June VSTOXX future is and my time is at 10 a.m. each day when I feel like both markets have settled down a bit. VSTOXX is only at a 25-cent premium to VIX. And my system right now, I'm going back, looking through it. My system right now does have us long VSTOXX and short VIX. And I'm down about 20 cents on that right now. So that's that relationship's tighter than it normally is. It just could be, everybody globally is, not only do they feel abused and taken advantage of in the U.S., but I guess call buyers in Europe are on VSTOXX are also feeling a little bit of a pinch and afraid to get in the van. However, I do have two different systematic methods of trading VSTOXX. One is to be consistently short. The other one is to be consistently long in the form of selling an at-the-money VSTOXX future. I'm sorry, selling an at-the-money VSTOXX call option and buying 2 out-of-the-money VSTOXX call options. And doing that in a way that I'm able to take in a credit. That system this morning sold the June 14 calls for 90 cents and purchased 2 of the June 18 calls for 40 cents each. And the whole idea with that sort of trade is if we do get some sort of a volatility event, you can trade out of it fairly quickly. If VIX and VSTOXX keep doing what they've been doing, staying at relatively low levels, you pocket that credit and then you move on to the next trade. So within VSTOXX, I think the futures are a little tighter than they should be right now. I wouldn't be surprised if that widens out. I wouldn't be surprised if we get a move higher in VSTOXX if the front month even outpaces a bit to the upside. And when I say front month, I mean the June contract now. So that's where we are at on VSTOXX. Not any really interesting trades. I started going through the tape before we talk about that market. Nothing fairly interesting that no big trades that are head scratchers or anything like that.
Mr. Rock Lobster, Mr. Rhoads here has been laying down some interesting spread trades between VIX and VSTOXX of late. I don't know. You might have a new spreading strategy you have to add to your newsletters. What do you think, sir?
Well, I just have to copy what he does. It's a lot easier.
Yeah. There you go.
I think there's a whole industry of people that have copied
his
me.
research ideas on us at our event in Chicago. Like, I finally remember the dollar over one with a week to go.
Yeah.
That does help me kind of stay in some of these trades sometimes. And I'm like, to be honest, I don't even know where I could trade a VSTOXX. Like, I've learned because of teaching and everything, my world tends to be very insular. Like people are like, why don't you trade futures? Like, it's hard for me to look at too many things basically, because half the time I'm teaching classes or writing stuff, or you know what the deal is, Mark. So I like to do new stuff. I like to read about doing new stuff, but ultimately I just end up doing the stuff that I know worked the week before. So I should branch out more, but I would like, because I like to get a beat on like what's going on in Europe with the VSTOXX, but can we even trade it in like a regular retail account here?
I trade it in my Interactive Brokers account.
Oh, okay.
Yeah, you can trade it.
And the options just structurally, unlike the VIX options, the VSTOXX options are options on futures. So you don't need a securities account like we need in the U.S. to trade it. I used to trade DAX futures all the time, and apparently I had let the permissions lapse. And when I went to put on a VSTOXX trade for the first time in a while, about 6 weeks ago, I had to ask for permission, and I got permission within 5 minutes, and then I traded it.
Okay.
So it wasn't so, I always think of IB for things like that, just because they truly are, they really are global. If you're going to try to trade anything outside of the United States, I think they're as good as any of the discount brokers.
Yeah, IB is kind of their premier domestic partner for this stuff. There are some other outlets you can trade them to. It might be worth compiling a list, because you're not the first person to ask that question, Mr. Rock Lobster. But definitely IB is a definite place we could recommend for trading these. So again, growing concern for those of you out there looking at the volume front and thinking, I may want to dip my toes in those waters. Starting to get more liquidity on that front. I know when I first started paying attention to VSTOXX, it was probably back when Putin rolled tanks the first time in Crimea, so about a decade ago in 2014. And back then, the volume numbers were still pretty anemic, and it was really hard to get here for domestic U.S. customers. So the game has certainly changed. The volume is ticking up, and there are domestic players you've actually heard of now that offer it. So if you are intrigued, maybe you're looking right now and saying, the domestic vol front's kind of Let's go back to the rock lobsters analogy. It's a mode of despair. I don't want to get violated in the mode of despair. Where else can I look? Then maybe international vol is a good place for you to look. Since we're talking volume, listeners, let's keep the party rolling with some of our volume breakdown. Let's get out to the mothership, at least here in the U.S. Of course, we're talking about Mr. VIX. Is it lighting up the tape? Coming into the end of a banger week, we had CPI, we had meme stock 2/3.0, we had a lot of things popping off this week, still had some earnings. Did all of that amount to a heck of a lot of paper? Couple of days, yeah. We had a couple of banger days out here this week. In aggregate, though, the volume trend has been down. I mean, it's hard. Whenever VIX starts sniffing close to 1 million contracts ADV, you know that's not really sustainable if you've been watching VIX for a long time. Things are really popping off in the broad market for VIX to be putting up north of 900,000 contracts a day. And that is the case. The ADV has come back in about 124,000 contracts, actually, so a fair amount. Down to 774. Seems like we're going to hit that today, already at 529,000 on the tape today. We'll get to the breakdown for every day this week in a second. First, let's go out to the top, the size positions. What's open for size in VIX options right now? You might be saying, okay, now there have to be some puts in the top 10, right? Because we're at pretty much 52-week lows in most of the vol indices out there. Realize vol is anemic. Everyone's got to be buying puts out there. And the answer for all of you out there is no. It's still 9-1 calls over puts in the top 10 this week. You will find the first and only put right at the bottom of the list. Number 10, listeners. 220,000 of the May 15 puts. I don't know what it takes to make it put season again in VIX. There was a while there, listeners, as you'll recall, when we were, shall we say, a little bit more elevated. That it was all puts all the time. Obviously, when you're down at a 12, too, structurally, there's not a lot of strikes left, so there's a lot of that going on as well. Again, the devil is very much in the details with these products, but still, if you're coming here looking for a put palooza, unfortunately, you have to wait another week at least. Number 9, 220,000 of the May 47 halves, right back to it. My favorite strike on the board. Number 8, 223,000 of the May 16s. What's that doing there? That's comparatively sensible. Number 7, here we go, right back to it. 229,000 of the AUG 47 halves. Number 6, we got 232,000 of the May 25s out there. So intriguing mix of strikes out there. Number 5, 243,000 of the June 20s, 2 O's. Number 4, 251,000. So we're already at number 4. We're barely north of 250,000 contracts, listeners. We've got the May 35s. Number 3, May 35 is not doing it for you. Allow me to present 263,000 of the June 35s, holding down the number 3 spot. Number 2, 286,000 of the May 20s. And once again, we have a out of the money, but all things considered, decently reasonable position at number 1, 348,000 of the May 18 calls, listeners. So there you go. Put fans, got to wait another week out there. Maybe dive into that mode of despair, see what you can find for yourselves, because it's time for us to find a little bit of Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, there it is, his contractually obligated double playing of his theme. Mr. Rhoads, sir, what caught your eye in the weekly options this week?
Well, if my file will pop up, I'll let you know. There wasn't a whole lot going on this week. I think today, last I checked, we hadn't even had we had not had a single weekly trade that that was above 100 contracts on the tape. So it's been a really quiet week for that stuff. Usually the week before expiration will be like that, because you'll often see in the weeklies somebody come up and try to take advantage of some sort of economic number that's on the horizon that's between expirations. We really didn't have that. But if you did, you would have just traded the standards that expire this coming week. I don't know why that file will not pop up. Come on, there we go. All right, Monday with VIX at 1339. Somebody came in and bought 2,200 of the June 12th 16 calls at 78 cents. Sold 2,200 of the June 12th 23 calls for 23 cents. Taken in or cost them 55 cents. They can make if we get some sort of volatility event between now and June 12th. And the only big economic number that I saw between now and then is the May employment number. The 12th is also the 12th is the next Fed meeting, but these would expire the morning before. So we saw that on Monday, and then on Wednesday, kind of a similar trade. VIX was down at 1268. And somebody bought 100 of the June 12th 18 calls for 39 cents and sold 100 of the June 12th 20 calls for 27 cents, spending 12 cents to maybe make $1.88 again if we get some sort of volatility event by the middle of June. And then we had seen a lot of bullish trades using the basically using May 29th options. I don't think there's anything that could make the market misbehave between now and May 29th. Somebody else agrees. I don't like this trade. There's always the trade I don't like. I don't like this trade. Somebody sold 300 of the May 29th 13 calls yesterday with VIX around 1250. They took in pretty much $1 on all of them. A few of them, it was 98 cents. I really hope that they purchase the futures to offset the risk of those short calls. I couldn't find a 30 lot in the futures that may indicate that, but that's a tough one to pick up on. So not particularly crazy about any of those three trades unless somebody knows something's coming in June that I'm not aware of. I did check just to see, because I had seen in passing that Biden and Trump are going to get together for Old Man Fest in front of nobody for a June debate, but that was not until toward the end of the month. That was the only thing that I thought maybe, if Trump creams Biden in the debate and people are concerned about that, or vice versa, or it's a complete tie and we're just continue to be clueless, but we're scared to death of either of those guys being the next president, that might end up in some sort of volatility event. But we got to wait till late June for that one.
Old Man Fest.
Yeah, I picture the two old guys sitting in the balcony at the Muppets.
Yes.
That's what we got running for president.
Statler and Waldorf. Yes, just rocking away in the balcony and yelling at each other. Yeah. I like it. Let's see if we see any paper out here this week. Like I said, VIX was struggling to fight its way out of the hole today and starting to catch up. In fact, as we were talking here, putting up some more paper, up to about 590,000 contracts on the tape today. So that's respectable. The big dog today, 46, almost 47,000 of the AUG, 13 puts. So there are puts trading, listeners, just not enough to fight their way into the top 10. Number 2, 40,000 of the AUG, 47 halves, right back at it. My favorite strike, it is inescapable. Every day this thing's printing. Number 3, 25,000 of the July 11 puts. You like those, listeners? July 11 puts. I'll have to go look and see really quickly. What are those going up for? Do we have a new ridiculous put strike to discuss here on the show? Those are going up for 5 cents. Mr. Rock Lobster, are you a buyer of the July 11 puts for a nickel, sir?
I have to say they don't look ridiculous. They're like there's a shot, there's a shot at these things now. It's always sticky down here. But I have to say that just coming off of what we did, I think there's definitely a decent shot that they become something. But 25,000, I have seen a lot more. And in the May cycle too for next week, the 12.5s, 21,000 are trading today. So there's definitely been a little, there's been a bid for stuff that there normally has not been a bid for. You also got another 3 days before the NVIDIA earnings. So it's like, if you're holding premium, like I said, you're in the moat, man. You're in the moat for a couple days still.
Just put that in your calendar, listeners. The Rock Lobster said the July 11 puts for a nickel are quote-unquote reasonable. That's where we are from a vol perspective. 11 puts. Just put that in your pipe and smoke it. In fact, we'll put it out to you folks, the ultimate arbiters. You like those for a nickel, yes or no? We'll let you know what you think a little bit later in the show. That's why you got to be following us at Options on Twitter the other day. Someone hit us up the other day. They're like, your handle's at Options? They couldn't believe it. I was like, where you been? Where you been for the past, decade plus? We've been holding court on Twitter for a while. Number 4, 23,000 of the AUG 36s, and number 5 today, 21,000 of the May 12 half puts. Yesterday, one of the more banger days we've seen in a while, 1.1 million contracts on the tape. 83,000 was the big dog of the July 18s. That was a funky one. Number 2, 45,000 of the May 14 calls. Number 3, 42,000 of the June 20s. Number 4, 41,000 of the AUG 47 halves. Again, I can't escape these freaking things. And number 5, 37,000 of the May 35s. In terms of size prints out there yesterday, what caught my eye, and I mentioned this a little bit yesterday on the option block, was that big block of the July 18s. In fact, they went up as a ratio risk reversal. Looks like paper sold 70,000 of the 18 calls in July and then bought 22,000 of the 14 half puts. They have here it priced out for even money. I'll have to go look and see exactly what the prices were that went up for. But either way, a bit of a weird one. Obviously, they did more of the 18s later on, 83,000. So you like that, listeners? Kind of a funky ratio collar almost. Makes some sense if it went up against futures or some other long position. We don't see that too often. We don't see a lot of VIX collars, which, if you think about it, VIX is actually a good product for a collar because you have a bid to the calls and a discount to the puts. So collar-wise, it sets up nicely. We should see more of these, but for whatever reason, we don't. And then we also saw a couple of flies yesterday, including a 16, 15, 13 half put fly going up 10,000 times they paid 37 cents for it. And I also saw the June 15, 20 call spread going up for 64 cents, 20,000 times. Let's get paper buying that bad boy. Some of the interesting prints. Wednesday, though, was the banger day. Closing in on 2 million contracts. I haven't seen that in a while. 1.84 million. The big print, listeners, 100,000 exactly. Not 99,999, not 100,003 or anything like we usually see. 100,000 exactly of the October 42 halves. If you're wondering what the hell that was, listeners, it was a big print. 99,000. I guess they did another 1,000 after that. It looks like they dumped them for 46 cents. But then again, it's hard to tell for sure. The market was 44 at 51 when they went up. VIX was still a little bit juicier. But either way, that was a pretty juicy, about a 90 vol on these. So if they are overriding these, they caught a decent bid. It's all the way out to October, though. So remember, October, that's where we're talking that premium still lurks in the futures. They had an 18 handle when they were sold these. So again, 42 half, a little bit of a different beast. Would you sell these 100,000 times between now and October? And what would you have on against it, listeners? Because obviously something else is lurking against it. We already saw as well 25,000 of the June 15, 35 call spreads going up, paper buying those for 68 cents. If that doesn't float your boat, how about the June 15, 18, a little bit tighter? Paper bought that 20,000 times for 36 cents. On to Tuesday, 688,000 contracts on the tape. The big dog, 43. Looks like we had another vertical, July 25, 45. Because we have 43,000, pretty much 248 each of the July 25 and 45 calls going up. So looks like some vertical action. Don't think it's a roll, even though it was only opening, we could tell on the 45s. This paper on the 25s, it's hard to tell. It obscures it a little bit. I don't think you'd be closing the 25s and rolling to the 45s right now in July. That'd be weird. So probably an opening call vertical. 41,000 as well of the June 15 half calls. 35,000 for number 4, the June 14 half puts, and 28,000 of the May 16s. And then kicking off the week on Monday, 772,000 of the May 15 calls, followed by 40K of the May 13 half calls, 30,000 of the May 14 puts, 26,000 of the May 18 calls, and 25,000 exactly of the June 65s. Had to sneak that one in there. 65s. Haven't seen one of those strikes in a while. There you go, listeners. 65. Mr. Rhoads, Mr. Rock Lobster, I was just joking about the puts. But what do you think about some of these funky ratio risk reversals and just this massive block of OCK 42 halves going up for 46 cents? Anything catching your eye out there in a couple of days of decent paper, at least?
I mean, yeah, you know, usually when you get down to 12, you see all this, people looking for the bounce. And it's been, I mean, you have to be honest, every time we've traded in the 12 handle in the last 2 years, we've been out of it within what? 2 weeks, 1 week. So, I mean, I see the paper going up, and it could definitely work out, but, I don't know. I don't know how long we sit here and sag, but I mean, the mostly a lot of that risk reversal stuff, when you sell the 13 put, the 12 put, I mean, it takes a while for that put to totally stink, basically. And the fact that it is still an out of the money put, even though it looks that it's at the money, because where the future is, I mean, I could see why traders do it. But it's I just would say it's expected paper at this point.
You know what else is expected, listeners? When we're plumbing the depths out here in VIX, to have new all-time highs in Russell's favorite product, SVIX. In fact, we are at it pretty much right now, right around 46.5, listeners, is pretty much where we're ticking right now. And that is pretty much the new 52-week high. So blowing well past 40, blowing well past the previous high. I think it was around 42.5, somewhere in that range. Up 2 3/4 points again on the week. So SVIX hitting new highs. Mr. Rhoads, I have to assume you are now completely out, or you still have more in your back pocket. What's catching your eye in SVIX, sir?
I have a quarter of a position. I haven't sold anything against it. And really the reason I haven't sold anything against it is I've got, I'm net short the equity market. So if that stuff starts to work, the SVIX won't work. So there have been a couple of days recently, SVIX is the only thing that worked for me. So I'm still in it. I'd like to, I'm always looking for a 10% retrace to add to it. So last week I said 40, I guess I'll say 42 now. But I'm watching it. I'm happy I own it. I'm happy I didn't sell calls against that last bit that I had. A couple of times I came damn close to having it called away, and then I just decided to stop tempting fate. Like a couple of weeks ago, I was short the 44s, and I think it closed at 43.85. So I decided to stay out of the way for a little while until I have some more shares to sell calls against.
That makes a certain amount of sense.
And I wanted to bring something else up.
Okay.
Can I deviate 1 sec?
Yeah.
I promise it'll be 15 seconds. You mentioned, why don't people do more of the collars? I think it's because of the margin situation. If you own the futures, if you're selling a call and owning a put, a lot of brokers are going to look at that short call as being a naked short call. But we also tend to see on the tape synthetic longs and synthetic shorts, and I think that's why. I think it's because it's easier, or for margin purposes, you can put on a synthetic long, selling a put and buying a call, and then buying a put and selling a call against those, and end up with the same sort of position.
Yeah, that makes sense. We said it before in the show. The devil is in the detail in all these products. You would hope you would have all your positions at one broker and they would see those as offsetting, but as we all know, that is not always the case. So I think you're right. Sometimes some extra legwork folks have to do to leg into what are effectively collar positions. We just don't see them going up like that here on the tape. Since we're coming up against it, listeners, I'll run down the rest of these vol ETPs, and we'll let Mr. Dr. VIX and Mr. Rock Lobster have their ways. UVIX 630 down almost a full point, 0.9 of a point, putting up 19,000 contracts today. And the ADV is 26,000, down 6,000. So as UVIX continues to erode, so does the volume out there. In terms of top positions, we've got the Jan 2026 one puts. My goodness, those are open to 5,188 times. I have to just look really quickly. I am curious, listeners. When did they open those and for how much? They bought those on April 30th. I thought those were fairly new. They opened most of them on April 30th. And what did they pay for them? If I can get my machine to play for me. 40 cents for the Jan 2026. Are you going out a ways? Why? I mean, it's going to reverse split. That's going to be a vestigial position. It's going to be locked on your books. You won't be able to get out of it for years. Oh, that's a good one. UVXY 2540 down 2.4 on the week. 25,000 contracts. The ADV also continues to go the way of the dodo. 41,000 down 8,000. So the reverse split not working wonders for them on the volume front. In terms of size positions out there, looks like we have the number one being 14, almost 15,000 of the June 8 calls. Those are the regulars now, not the pre-split adjusted. We have multiple pre-split adjusted out here. Man, talk about nonsense. VXX 1140 down 0.8 of a point. 26,000 contracts on the tape today. The ADV also going the way of the dodo, 69,000, down 16,000. So across the board, it's been, even though there was some vol out there this week, it's kind of been an anemic volume week. In terms of top positions, the size position right now in VXX, 18,000 of the June 13 puts, which if past is prologue, they're long those, and those are looking pretty good right now. Mr. Rock Lobster, anything catching your eye in the vol ETP space before we roll on into the crystal ball?
Well, the best thing is the puts Sebastian and I bought in UVXY are up almost 100% in 2 weeks. So
which ones were those?
I actually rolled them today. So
which ones were those?
There's some volume on a couple of strikes in June to July. It's because us and our students were doing the post-split roll trade when UVXY gave us that lovely gift of splitting 6 for 1. Why they don't do it 10 for 1, I don't know. But anyway. So I would say, yeah, there's a lot of happy UVXY traders. A lot of happy UVXY traders out there. If you're short it,
yes.
If you're long it, you're in the moat and somebody's violating you terribly.
If you're long it, you were not listening to this show at all for years now. As we keep on rolling, listeners, it's the final portion of the show. It's time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we get difficult, we get dangerous, we attempt to divine what the vol gods have in store for us for the coming week. And as I mentioned at the top of the show, we have VSTOXX coming in at a 12.13. And we have VIX right now catching up, going down to about a 12.18 right now. So in terms of price level, we're hanging out at close to 1-to-1 again, which again is that dance. I was pricing in a bit of a premium last week, and I think so was The Rock. So was Mr. Dr. VIX. So I was at a 12.25 though in my VIX cash. We're at a 12.18 right now. So that's actually looking pretty good. I'm going to go winner, chicken dinner for me on that one with the bullseye. VSTOXX. Not so much. I was at 12.75, and again, we're at 12.13. So I was not pricing 1-to-1 VIX at VSTOXX. Andrew was the coward of the bunch. He only did VIX last week. He was at 11.97. Not bad. About 0.21 away. Close, but no cigar for him. And Mr. Rhoads going to the upside, 12.89 for VIX. No cigar there. And 13.5 for VSTOXX. Clearly no joy there. So a long way around. I'm the winner this week. So you know what? I'll kick things off. I will be the charitable one, allow everyone else some extra time to mull on their prognostications. All right, so we're at about a 12.18 this week. And again, I would love to say that there's a catalyst for something to kick vol into higher gear. I just don't see it. Well, we hit, if I predict 11 handle, it's going to come to pass here, listeners. I'm a little skittish about doing that, but I might have to go that way. I might have to say, not much. I'm going to say 11.95, and because VSTOXX, I'm having a hard time getting the levels, listeners, but I'm going to say 12.03. So very close, 0.08 away on VSTOXX. All right, who was next closest? It was Mr. Rock Lobster. You get to go next, sir. What are you feeling for VIX? And take a flyer. Go VSTOXX as well.
So where's VSTOXX trading now?
It's at a 12.13.
Okay, yep. 12. Oh, wow. So, all right, I'm going to go, I'll go 11.99 for VSTOXX and 11.85 for VIX.
All right, 11.99 listeners. If I could type correctly, there we go. 11.99 for VSTOXX. And what'd you say, 11.85 for VIX?
Yeah. So we just got to let the show go another minute, and we'll be down to 11.99. Yeah, I'm only like 20 ticks away.
We'll be close. Then last but not least, Mr. Once and Future VSTOXX. You should be really right on VSTOXX. Maybe you're off on VIX these days. I don't know. But what are your wagers for both, sir?
Well, I was going to do 11.90 for VIX, but I'm not doing that now because that's no fun at all. This is the benefit of going last on The Price is Right. You know what? I don't see any reason whatsoever that VIX should do much of anything. So I'm going to say 1160 on VIX. That'll be a new 52-week low for sure. And I'm going to say 1220 on VSTOXX. I think the bottom's kind of in on that one.
Widening out again. We shall see out there, listeners. Speaking of seeing, let's look really quickly what you folks have. Oh, you can't make up your minds again. I turn to our audience as the ultimate arbiters, and once again, you are split exactly 50-50 on whether you want to buy or sell those July 11 puts in VIX for a nickel out there, listeners. So, yeah, 50-50 each. So no joy there, unfortunately, listeners. That's what makes a market, I suppose. Let's go around the horn, though. Let's start with Mr. Rock Lobster, sir. If folks want to check out what you got cooking, where should they go? What should they do?
Yeah, optionpit.com, 888-TRADE-01. If you want to learn how to buy puts in this market and not get taken to the hoop, you can do my weekly profit cycles where you get your VIX to pay for your SPY, and then when the SPY goes down, you make some money. So you can learn how to trade like that. There's all kinds of ways to trade, but you can learn how to trade options at Option Pit. There you go.
And Mr. Rhoads, sir, if folks want to keep up with all your latest musings on VSTOXX, VIX versus VSTOXX, all that fun you're cranking out right now, where should they go? What should they do?
Well, I've got a Substack, a free Substack. Feel free to subscribe to that. I don't bother anybody to give me money or anything from that. It's just my full name, RussellRhoads.substack. Some things that I do will pop up on the NASDAQ website. Some things I do pop up on the Eurostock site. But I always I tweet out anything I do. My Twitter is at Russell Rhoads. If you follow options on Twitter, you'll see that they've already tweeted my name a few times there. So I'm easy to find right now.
You are an easy man to find. 2 S's, 2 L's, RHOADS, all one word on the old Twitter. If you want to see that data and a lot more cooking over there, a couple of places you can go. Just go to the UREX website, EUREX.com. That'll have Russell's data and everything else out there. If you want to go straight to all things VSTOXX, stocks.com, STOXX.com. We'll also do it. You can see the trading volume up there. You can see the historical trends. You can see OI, all that kind of stuff that may intrigue you if you're thinking about dipping your toes into these waters out here. Unfortunately, that music means we have come to the end of the show. That will also do it for all of you on-demand listeners. Thank you for joining us this week. If you want to keep the party going with myself and the Rock Lobster coming back in a little bit to break down all the crazy paper, yeah, spoiler alert, there was some. It was a meme stock week after all, listeners. Then you want to join us on the Pro for Options Oddities. The only place to get that, theoptionsinsider.com/pro. We had someone write in recently, one of our pro members, just saying about how this stuff has really changed the game for him. If you're listening to a show like Options Oddities, you don't come away with at least a couple of nuggets that you're scratching your chin saying, I might want to look into those more, or maybe want to trade those, or stay far away from those, whatever the case may be, then you're just not listening. Because that's the problem Rock Lobster and I have. You come away from the show wanting to trade all these things, and it's impossible. But it's fascinating. It's a good problem to have. theoptionsinsider.com/pro. And then we're back again on Monday, kicking things off with the option block all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.